All right, guys. So like I said last night on the webinar, I don't like to keep things very complicated. I like to keep them very simple. I have a trading strategy that I really like to stick to. I don't care if a specific signal comes out or if there's somebody that's a better trader than me that consistently is telling me one thing or I'm saying something else. I stick to my analysis, guys. Like I told you last night, trading is more than 90% psychological. You could be the greatest trader ever. You could have the greatest skill set. You could study your ass off for 10,000 hours. And if you don't understand that this is a psychological game, you're never going to make it. So, and a couple of keys right off the bat is stop trying to win every single trade and stop trying to get rich overnight. Okay, those are the big things that I learned a long time, over the course of about the year that I've been doing this is when I first got into it, I was trying to throw massive lot sizes on, one trade or two trades or something like that, trying to get rich. I was trying to make thousands of dollars in a day, but I started to look at it realistically. I wasn't making thousands of dollars a day at my job. So why did I expect to come into something I've never done in my life and be able to make thousands of dollars right off the bat? Try to get consistent. Try to focus on the pips first. Yes, pips aren't going to pay your bills. Money is. But try to focus on the pips first. Get confident, consistent. Then you can adjust your lot sizes. If you don't understand what risk management is, you do not need to be trading live. If you don't understand how much you're willing to risk right out the gate, you do not need to be entering a trade. That's one of the big things that Alec Dempsey taught me. Like I told you last night, one of the biggest keys is finding a trading partner. Find someone that's going to keep your ass in gear. Find somebody that's going to keep you accountable, that knows your trading strategy, that's going to help you not break it. It's kind of an accountability partner. And, that really has helped me a lot. My fiance is my accountability partner. She keeps me in line. She's literally saved me a million times from blowing hundreds of dollars, thousands of dollars. She's helped me make a lot of money too because she knows my trading strategy. And if I'm trading past the time where I don't normally trade, she tells me to close the trade, even if it's in a loss or if it's in profit or whatever, because it's a psychological game. The markets are always going to be there. Don't think, one trade is going to change your whole life. It could, but the biggest thing is the markets are always going to be there tomorrow. So enjoy your life. Do not sit in front of the screen all day long. Don't stay up all night, every single night, staring at charts, guys. These markets are always going to be there. Don't chase the markets. Let the markets come to you. Okay, so those are some of my key things that I always like to say at the beginning of webinars. I'm not going to go over all my indicators and stuff like that like I did last night, but as you guys know, if you were on yesterday, if you weren't, go ahead and watch the recording. I posted it a couple of times in the chat today. But I use ADX just to, see trend momentum, and I use RSI. My setting is 5. And I use Bollinger Bands. And I do not use those as my, telling me, okay, I need to buy, I need to sell. Those are on top of my candle reversals, my channels, my support and resistance, my extra confirmations. I don't, like right now, I've been doing this so long, my eyes are toned to where I can see support and resistance. I don't draw support and resistance. I can see 50 different support and resistance right now. I'm not even looking at the Bollinger Bands. I'm not looking at any of my indicators. All I'm looking at right now is I'm going to zoom out on the daily and I'm going to look and see what the market's telling me, okay? That's all I'm doing right now. I'm just looking to see what the market's telling me, okay? So as you can see, there's a lot of sideways movement right here, but this is a daily. One candle can be 100 pips, guys, and that's what you got to understand. I see a lot of people trying to enter on the daily. Like, that makes no sense. You're going to have a drawdown. Like somebody sent me something yesterday, and they're like, check out this entry, man. And it was on the weekly. Like, dude, like, you're about to blow your account. Like as you guys have seen, I've been watching some of the stuff that Clay's been posting. Some of his entries are on a 1 minute chart. You guys got to understand how much skill that takes to get an entry on a 1 minute and 5 minute chart. And that's what you guys got to work yourself down to. But anyway, like I said, I like to start on the daily, kind of see what the market's giving me. As you can see, with the naked eye, you can see a lot of support and resistance areas that are kind of bouncing off and stuff like that. But for me, I don't like to mark them up because it tricks my eyes, it messes with me, and it's too clustered. So dropping down to the 4 hour, what I tell you guys last night, all I like to do is I like to mark up my channels and Fibonacci first, just kind of see where we're at, okay? So I'll give you kind of a little example, like a little channel. I'll give you a couple different ones so that you guys can see what I'm talking about if you guys weren't on last night. So just, drawing trend lines, stuff like that, to where you see multiple bounces and stuff like that. Let me see here. Is that background noise really loud, guys, or no?
No, you're good, bro.
Okay, cool. So basically, guys, when it comes to a channel, that's mainly how I trade. I trade mainly off channels in Fibonacci, and I use reversal candles. But just kind of giving you guys like an example, think of a pipe. Like if you had like a pipe on the ground and you threw like a little marble or a bouncy ball or something in that pipe, it's going to bounce off the top, bounce off the bottom, like the floor and the ceiling, right? And that's kind of how I look at this, okay? So let me give you a little example, guys. Remember, this is on the 4 hour. I did not enter on the 4 hour chart. I'm just giving you guys an example, okay? So as you can see, you know, we have, you know, multiple taps here, you know, that it's just think of this as support and resistance, but it's diagonal. Okay. So come down, bounce, up, bounce. And like I told you guys yesterday, it takes a large candle to break through support and resistance because it takes a little bit of more momentum. You know, think about it like this. If you had a basketball, you throw it at the ground, it's going to bounce off. You throw it at the ceiling, it's going to bounce off. But if you fill that basketball full of concrete and you shoot it out of a cannon, it's most likely going to shoot straight through your ceiling, right? So right here, as you can see, it took a big candle to break through it. But I always wait for a retest when I enter. You know, I'm not much of a huge swing trader just because a lot of times when I would swing trade, I would get in a trade. I'd be up 50, 60, 70 pips, sometimes 100 pips. I set a break-even stop loss or a 10 to 15 pip stop loss, comes right back up and hits my entry again. And I lost all of those pips. So what I like to do is I like to target my entries off Fibonacci extensions. But anyway, so right here on this example, so let's say none of this stuff has happened, okay, guys? Let's say none of this stuff right here has happened. So let's say we see this move here, we see this bounce, we see this bounce, and we see this bounce. Okay, so we got a little bit of channel going here. Now, what I would do is I like to see, let's say the market's here. None of this has happened, and we see it coming up towards this top of the channel right here, which is a trend line. So I'm keeping my eyes open. Does that mean I buy? No. Patience is key. Do not trade just because the market's open. Do not trade just because you're bored or you want to make money or you need to pay your rent or all these cool-ass shoes online and you want to buy. Stop doing that. Just wait for the setup. Be patient. Let the market come to you. So what I would have done is, let's say the market's here. I would have waited until it come up to my top of my trend line here, and I would have saw what it did, okay? So as you see, you know, it's bouncing off, stuff like that. Obviously here, you know, we had a fake breakout, but right here we see it coming up.
Hey,
right?
Matt, I'm sorry to interrupt. I got to run for something really quick. Hopefully I'll be back in like 10 minutes. I'm sorry, this just came up last second.
Yeah, no worries, bro. We're recording it for you.
All right, bye.
All right, take it easy. So as you can see, the market's coming up here, right? So that's got our eyes on it. We're looking at it. Okay, cool. Now we're looking to see if we're going to sell this, or we're going to look to see if we see a breakout and a retest to see if we wanted to buy. Okay, so it's coming up here. Let me highlight this for you. So that when I drop down to the lower time frames, like I said, we're on the 4 hour. Don't try to enter on the 4 hour time frame. So let's say this area has happened, but this engulfing hasn't happened. Okay, so we see it tap. Now let's drop down to the 1 hour. Alec just sent me a snap. Stupid. All right.
Yo, I'm pissed because I fucking missed my chance to stack on AU because I'm at the gym right now, so I wasn't eyeing it up, and I didn't set a sell limit, and it literally double tapped to 38.2 retracement on the 15-minute, and it's tanked since, and that was gonna be my re-entry. I'm pissed.
Yeah, oh, nice. Dang, I didn't even know it tanked that much. Yeah, I'm in a sell on AutoCAD right now. About 50 in profit. I didn't even notice that. Holy shit, nice. I didn't even have it instant execution. That was a sell stop I had. Nice, cool.
Really? Yeah.
Cool beans. Okay, cool guys. So right here we had this blocked out, right? Remember we were watching that come up for the third tap. Okay, so we saw it come up for the third tap. Now what I start doing is I start kind of eyeballing it for multiple confirmations. If I have one confirmation, do I get in? Hell no. I need at least 3 confirmations before I'm going to get in a buy or a sell. Now, like I told you guys yesterday, it's not about how many times you can win. It's about how much you can limit your losses, how much you can minimize your losses. You can literally lose 80% of the time and still have a profitable week every single week. But you guys don't, you know, you're so focused on, you know, oh, I don't want to lose this trade. I don't want to lose this trade. So you guys don't set stop losses, or you'll just move your stop loss as it goes along, and you're so confident that it's not gonna, you know, that it's gonna eventually go into profit, that you guys end up blowing your guys' accounts. So, you know, I had people messaging me last week that were like 200 pips in the negative. There's absolutely no reason you guys should be 200 pips negative, especially if you're using this type of strategy. Okay, so right here we're looking for this to reverse in this area. So we had the trend line, that's one confirmation. Okay, now what else are we looking for? Now, if you guys kind of look at this, you can kind of see that there's a support and resistance area right there too. But other than that, if you want to go by zones, like Clay does, Clay's he's really, really good trader when it comes to zones, pretty much on any time frame. So there's a little zone right here too. But, other than that, so just by looking at this, let me show you a little something here, guys. I'm not going to explain Fibonacci all in detail because we're going to be on here forever. And I want to give Clay a chance to be able to talk as well. Now, you can do Fibonacci multiple different ways, but the first thing I would have done as soon as I saw this right here, I would have went from the most recent high to the most recent low, wicks, not body. I don't go by bodies. People do different things, but I go by bodies. And I see it come up. It perfectly tapped the 78.6. So that's the second confirmation that I'm looking for right there. Okay, great. So now I see that. Now I use Bollinger Bands as an extra confirmation. I think of it as a rubber band. Now this wouldn't have really opened my mind too much because it didn't actually touch the Bollinger Band. So I wouldn't have really been looking at that. But if you look at my crosshair here, coming down, I'm going to be honest with you guys. RSI oversold and overbought is mainly bullshit. But I use it as an extra confirmation. So right here, it's over the 70. So it's showing overbought. So that's 3-4 confirmations right there. Now, the next thing I'm going to do is I'm going to drop down and look for my entry. We got about 10 minutes left. So yeah, we'll have to make another Zoom after this is over, guys. But let's see if I can go back and find that spot that I squared out. And what I tell you guys last night, I only enter on a retest or I only enter on an engulfing print. Okay. So we got the 78.6. Excuse me. We got a 78.6. You have a confirmation of it being overbought and trend line. That's 3 confirmations. There's a lot of consolidation right here. You had on the lower time frames, but I would have rated for the retest. There's a million different retests right there. That could have scared you a little bit. Maybe you would have thought, okay, this thing's going to break on engulfing prints, okay? And I set my stop loss 5 to 10 pips above that, so I minimize my losses. So basically what I would have done is I would have rather entered right here on this engulfing or this engulfing. Either way, I would have put my stop loss about 10 to 15 pips above it. My stop loss never would have got hit, and look at this. So what I do is I twin trade a lot of the time. I'll put 2 entries. My first take profit is normally 30 to 50 pips. My second take profit, as soon as it's 15 pips in profit, I put a break-even stop loss and adjust my stop loss into profit as far as it goes down. So if you guys would have taken this trade right here, right on that entry, okay? I mean, look at this. 50 pips, 60 pips, 70 pips, 80 pips, 90 pips, 100 pips. Like all the way down to this, just even this first swing to where it made it an engulfing in the opposite direction is 100 pips. 100 pips on one trade. 2, if you did twin trades and you held them both or you closed out one, I normally trade 0.05s, 0.1s. That's something, people ask me all the time, like, man, why aren't you throwing standards? Because that's not smart. Like the way that I trade, it makes no sense for me to throw standards because I like to know how much I'm risking before I enter the trade. And the thing is, guys, if you have a 10 pip stop loss, that's $100 on a standard you just lost. For me, that's stupid. I would rather trade a 0.1 on 10 different pairs and win, 10 to 15 pips or, lose a couple pips on one and then, have one of them hit my take profit of 100 pips. Guys, that's what you got to understand. Stop trying to get rich off of one trade. And most of the time, guys, if you were to trade a standard lot, you're either going to revenge trade or you're going to get greedy. If you win the standard lot trade, a lot of times what's going to happen is, let's say you make $500. It's not even noon. And you're like, okay, I want to make more. You jump back in the market and you lose it all. Or you'll jump in with a standard lot, you lose $100. And the first thing that's going to pop in your mind is, I got to make that money back, right? How many times does that happen to you guys? You get in the markets, you over leverage the shit out of your account. You lose $100, $200. You're like, I got to make this money back. You jump back in, lose more. You jump back in, lose more. You jump back in, you lose more. Then you're up all night trying to make it back just to lose. That makes no sense. For me, I normally trade New York. That's my main times. As you guys can see a lot of times in the chat, if you see me trading like a 0.01 or a 0.02, that's because it's not correlating to my trading plan. I normally trade between about 8 o'clock in the morning till about 2 to 3 p.m. in the afternoon. Why? Because I hate Asian session. It just consolidates most of the time, and I like to enjoy my day. This is something I do full-time, network marketing, Forex. I don't have another job. This is all I do. So I like to enjoy my life. I like to spend time with my family and my friends and stuff like that. I don't want to be standing in front of a chart all day. You know, my goal is not to make thousands of dollars a day. My goal is to be able to pay my bills every single month at the end of the month and be able to have money left over. You know, my bills are about $4,000 a month right now. So that's just my goals. You know, I'm not out here trying to, you know, break 6 figures a week like some of these people. You know, they tell you they make $7,000 in a day, but they didn't tell you they lost $4,000 the night before. You know, so this is how I minimize my losses and try to be as consistent as possible. Like on this trade right here that I showed you, there was like 6 different confirmations. If you throw in some of the stuff that I've learned over the last couple of weeks from what Clay's been posting, or some of the confirmations that Alec uses, you know, you got 10 different confirmations right there for a sell. If you would have lost, you're only losing 15, 20 pips maximum. 15 to 20 pips, you know, stop loss, you're willing to risk for 100 to 150 pip take profit. You tell me if that's worth it. For me, it's a no-brainer. So that's just kind of how I do it, guys, right there. But I don't want to take over the entire thing. I want Clay to be able to teach too, because I've been wanting to learn from him a lot, because he does a lot of things differently than what I do. But we only have 5 minutes left on this webinar, so I'm going to go ahead and end this. I'll post another link in the chat, and then is that cool, Clay? If you go ahead and take over the next training.
Yo, Clay's not on here. He had to get off and help. He had,
That was him that had to get off?
Yeah. He had that emergency. He just posted in the chat, though, that he'll be home in like 10 minutes to start another one.
Okay, cool. All right, so cool. I can just finish this then. Can everybody unmute themselves and just let me know that this is making sense? Guys.
Yeah, the more I watch you do this, the more it makes sense. That's why I'm always asking if somebody's doing a webinar.
Cool. You guys want me to do another example, or is there anything that doesn't really make that much sense? Or?
Yeah, if you don't care, just do one more example on on why you would sell or buy, because I think I might have to do something with the kids whenever you were pointing at like the confirmations and stuff.
Okay, cool. All right, cool. So let's see. You want me to do one in a different direction? I can do one as a buy, or I can do one as a buy since we just sold that one. So let's say right here, I can see this perfect. I can see multiple confirmations right here without even marking anything up. So let's say the market's, hasn't done any of this. Let's say we're coming down right here and we see the market's coming down. First thing I'm going to do is I'm going to pull out my fibs. I'm going to go from the wick high to the low, or the low to the high, sorry. And I'm going to see what this is at. Right here, 61.8. That is the golden level. 61.8 right there. Okay, so I'm seeing, all right, this thing's coming down, it's coming down, and I see it coming down to the 61.8. I got my eyes peeled, all right? I'm looking at the charts. That doesn't mean I'm entering just because it's a 61.8. So what am I going to do? I'm going to highlight this for you guys. I'm going to give you a couple multiple confirmations as to why I would have bought this. Damn, that was such an easy buy too. I can't believe I didn't even see that. But all right. So there's a little channel here too. It's kind of a sloppy channel. But you guys should be able to see that, right? You guys can see that channel, right? Somebody say yes or something.
Yes.
Okay, cool. You can see it's just kind of abiding by that little channel. So we got a little channel here. It's coming down to our channel, bottom of the channel, right? And as you look over to the left, look to the left when you're trading. The market leaves clues. What happened right here? Market came down, instantly reversed, right? So we're right in that same area. We saw the market made a massive reversal right there. Okay, so we got this support. We got this massive reversal that happened over here to the left. It's coming down to 61.8, and it's right here by our trend line. So that's 4 confirmations right there. Okay, now if we look at our indicators at the bottom, all right, at that time, it was oversold, right? That's 5 confirmations. Okay, does that mean we enter? Absolutely not. Drop down to the 15-minute time frame, and let's see if we see an engulfing. What do you guys see right there? Somebody tell me what that is. What is that?
Engulfing.
Boom. Right there. I would have bought. What do I tell you guys? As soon as I buy, I put my stop loss 10 to 15 pips below. It never would have touched it. And if you twin traded off of that, just the first swing is 65 pips. You would have taken it all the way to where it's at right now, about 130 pips. You guys cool with 130 pips on one trade? Is that going to pay your bills? Probably. So I hope that helped, guys. But this is about to end. I'll go ahead and stop this one. I'll post the recording for this in the chat. And then when Clay's ready to jump on, we can have him teach as well. So I'll talk to you guys in a minute.